This video is created by Jagrat Creation. In this video lecture, I welcome all the students who are interested in learning the application of Section 37 of the Partnership Act while solving the sum on partnership retirement. I also welcome all those teachers who wish to use this video lecture as a teaching aid for their students. I want to solve one sum on retirement which has been asked recently in IPCC examination. Observe the sum on the screen which I intend to solve here before you. This is the sum that I want to consider. I read the sum for you. A, B and C were partners sharing profits and losses in the ratio of 2:2:1. Their balance sheet as on 1/4/2015 stood as follows. This is the balance sheet. On asset side, fixed assets, inventory, trade receivable, cash and bank balance, reserve, trade payables and capital of the partners. On 1st of October 2015, C died. So after 6 months from the date of balance sheet C, one of the partner has died. His representatives agreed that goodwill of the firm be valued at 5 lakhs goodwill, not to be shown in the books of accounts. So retiring partner will get his share in goodwill from the continuing partners. Here C is a retiring partner. He will get his share in goodwill, and that share in goodwill will be paid by the continuing partner A and B in their ratio of gain. So here there is a profit sharing ratio 2:2:1. Share of C in goodwill is 1/5. So 5 lakh into 1/5. 1 lakh rupees will be paid to C for his share in goodwill, and that 1 lakh will be paid by A and B in the ratio of their gain. Fixed assets written down to 1 lakh. So this is a revaluation loss. Revaluation loss of this fixed assets 10 lakhs reduced by 1 lakh. That revaluation loss will be distributed amongst partners in the ratio of profit sharing. That is 2:2:1. In lieu of profit, C should be paid at the rate of 25% per annum on the capital as on 1/4/2015. Now C is a partner in a partnership firm for first 6 months of the current accounting period 15-16. So he is a partner for first 6 months. He is entitled to have a share in profit. In the mid-time, interim final accounts are not prepared. So the representatives of the deceased partner C have agreed to collect or to have 20 at the rate of 25% on the capital balance as a share in profit. Now here interim books of accounts are not prepared. The real profit at the end of 6 months, first 6 months is being not found out. So on the basis of estimate as per amicable agreement, the C should be paid 25% per annum on his capital. Current year's 15-16 profit for whole year profit after charging depreciation 95%, 50,000 related, 50,000 is the depreciation for first 6 months. First up was rupees 4,05,000. Profit was evenly spread throughout the year. So profit is even except this depreciation. All expenses are also even. The incomes and the revenues also evenly distributed on the basis of time scale, with only one difference, that depreciation for first 6 months is 50,000. Total depreciation is 95,000. So depreciation for the last 6 months is 45,000. And it is obvious because there is a decline in the value of asset by 1 lakh at an interim stage at the time of retirement of a partner, that is C. As on 31st of March 2016, the following balances are available. Inventory, trade receivables, trade payable, cash and bank balance. So all these 4 current assets and current liabilities balances are given to you. So inventory, trade receivable, cash and bank balance and trade payable, their closing balances are given to you. Fixed asset is subject to revaluation. Reserve will be distributed amongst partners. Capital balance will be transferred to the partner's capital account. So actually, we have studied a capital comparison method to find out the profit. by comparing the capital between interim periods. So here you are given the closing balance of assets and liabilities, opening balance of current assets and current liabilities are available, fixed assets details are given to you with depreciation. So you can prepare the balance sheet, assets and liabilities for the closing balance sheet you can prepare. You are also given the profit. Now see, in a capital comparison method, we find out the profit by comparing capital. In this you are given the details of profit. So by capital comparison, applying the principles of capital comparison method, here we are going to find out the capital. That's an important issue to be understood by the students. Generally, capital comparison method is applied to find out the profit. Here the profit is already given, 4,05,000. So we are required to find out the capital balances at the end of the accounting period by applying the principles of capital comparison method of single entry. That's an important point. You are given the drawings for first 6 months, drawings of 3 partners. In the last 6 months, the drawings are of only 2 partners because C has already retired. Prepare the balance sheet of the firm as on 31/3/2016. Assume that the final settlement of C's executor was made. Prepare the capital accounts of the partners for 2 interim periods. Now, this is what is being questioned. So, I am required to prepare the balance sheet at the close of the year. I am required to distribute profit for the first 6 months between 3 partners A, B and C. And I am required to distribute profit for last 6 months between A and B. And in light of that, I am required to prepare capital account of A, B, C for first 6 months. And I am required to prepare capital account of A and B for last 6 months. Let me start. So, this is the balance sheet that I prepare. Profit and loss appropriation account for first 6 months, next 6 months. This is a capital account for first 6 months. This is a capital account for last 6 months. Here A, B, C are the partners. Here A and B are the partners because C has retired after 6 months. This is the details of the sum given to me. This is the sums given to me. Details of the sum given to me. Now, I start with first adjustment, goodwill. So, goodwill of the firm is valued 5 lakhs. Goodwill not to be shown in the books of accounts. So, goodwill has to be adjusted to the partner's capital account. Now, retiring partner gets a share in goodwill. His share in goodwill is 1/5. So, 5 lakhs into 1/5, that is 1 lakh, will be received, will be given to C. So, 5 lakh into 1/5, 1 lakh rupees will be given to C. Who will give? That will be paid by A and B. In what proportion? A and B are sharing profits in the ratio of 2:2 intersect. There is no mention in the sum itself that there is a change in the profit sharing ratio after the retirement of C. So we presume that the same profit sharing ratio continues even after the retirement. So gain ratio is equal. So 1 lakh rupees goodwill paid to C will be borne by A and B in the equal proportion. So paid by A and B equally. So 50,000 is paid by A, 50,000 is paid by B. So A's capital account debit 50,000, B's capital account debit 50,000, C will be given 1 lakh. This is how goodwill is adjusted to the capital accounts of the partners. Gaining partner's capital account is debited and the retiring, sacrificing partner capital account is to be credited. This is how goodwill adjustment is taken care of. Now next. The fixed assets written down value is 1 lakh. So this is a revaluation loss. Revaluation loss will be distributed between A, B and C in the ratio of their profit sharing, that is 2:2:1. So let me write down the fixed assets on the face of my balance sheet. Decline in the value of fixed assets 1 lakh. So 9 lakh is the balance after writing off the decline in the value of fixed assets, and this decline in value is known as revaluation loss. And that revaluation loss will be distributed amongst partners A, B and C in the ratio of 2:2:1. So 1 lakh into 2/5, 40,000 share of A, 1 lakh into 2/5 share of B, 40,000, and 1 lakh into 1/5, 20,000 is the share of C. So here I debit revaluation loss between A, B and C, 40,000, 40,000 and 20,000. This is how distribute the revaluation loss. This is how this second point is considered. Now third, in the first 6 months, C is to be paid on an estimated basis at the rate of 25% per annum on his capital balance as on 1/4/2015. So capital balance of C as on 1/4/2015 is 3 lakhs. 3 lakhs into 25% into 6 by 12, 6 months is the period for which he is entitled to have a profit. So he is entitled to have 37,500 as a share in profit for 6 months. And this share in profit will be debited to profit and loss appropriation account for first 6 months, and C's capital account is to be credited for that. So first 6 months, share of C, estimated share of C in profit, that is debited to profit and loss appropriation account. This is worked out on the basis of agreement. This is not the real profit distributed for first 6 months. But as per amicable agreement, C's representative are happy to have 37,500 as his share in profit because interim books of accounts have not been prepared. So profit and loss appropriation account debit to C's capital account credit. So he is given share in profit 37,500. Now, entire current year's profit, 4th point. I would like to prepare a working note for that. The profit for the whole year is 2,05,000. Total depreciation has been deducted while finding out the profit was 95,000. Out of 95,000, 50,000 is the depreciation for first 6 months. So up to 1 for first 6 months and next 6 months. These are the two rows that has been prepared. First 6 months depreciation is 50,000. Total depreciation for the whole year is 95,000. This 95,000 is the depreciation on fixed assets, so deducted from the balance of fixed assets, 9 lakh minus 45,000. So you will find the amount to be recorded in the outer column in the closing balance sheet. So depreciation was deducted from fixed assets and what debited to profit and loss account was 95,000 for the whole year, which is being shown in this point number 4. So 95,000 deducted, 8,05,000 is the balance of fixed assets. Now, profit for the whole year. How much is the profit for the whole year? 4,05,000. Now, 4,05,000 is the profit for the whole year. After deducting depreciation, 95,000. Profit for the whole year is 4,05,000 after deducting depreciation, 95,000. So, what was the profit before depreciation? So, 4,05,000 plus 95,000, 5 lakhs is the profit for the whole year, that is before depreciation. Profit is evenly distributed during the year. So first 6 months profit 2,50,000, next 6 months profit is 2,50,000. Now 2,50,000 minus 50,000 depreciation, so you will get the profit after depreciation in first 6 months, and profit after depreciation in the last 6 months, 2,50,000 minus 45,000, that works out to be 2,05,000. So this is the profit available for distribution in first 6 months, and this is the profit available for distribution in the last 6 months. In first 6 months, the total profit is 2 lakhs. Out of that, on estimated basis, 37,500 is already been given. So after from 2 lakhs, 37,500 has been paid as per agreement, and the remaining amount will be distributed between A and B in their profit sharing ratio that's equal. And the last 6 months profit, that is 2,05,000, wherein C is not a partner, but he is entitled to have share in this last 6 months profit as per the provisions of Partnership Act, which I intend to explain you in this sum. But before that, let me write down the profit available for distribution in first 6 months and profit available for distribution in the last 6 months. In the first 6 months, profit share of C is given as per agreement, 37,500. So remaining profit will be distributed between A and B in the ratio of their profit sharing, that is equal. Before doing that, let me complete the remaining points given to me in this information. I have concluded up to 4th point, Now following were the balances. So let me write down inventory on the asset side, trade receivable, asset side, trade payable, liability side, cash and bank balance, asset side. Drawings of 3 partners in first 6 months debited to the capital account of A, B, C in the capital account prepared for first 6 months, and in the last 6 months A and B's capital account is debited with the drawings. This is how I have considered all the points. Now this profit, as I told to you, out of that 37,500 is paid to C as per agreement. Remaining amount will be distributed between A and B in the equal proportion. This 2,05,000. From C, the retiring partner C is unpaid. So he has a right to have a recovery or to have a share in profit as per the provisions of the Partnership Act that I want to explain to you. So, copy the remaining balance sheet is done. Capital of ABC is done. Reserves will be distributed in the ratio of profit sharing. That is what? How much? 2:2:1. Now, everything is done. Now, very important point. 2 lakh minus 37,500 that will be distributed in the ratio of equal. 1/2, 1/2. So, A's capital, B's capital account is credited with that. Now, capital account at the end of first 6 months are over. On the basis of that, you are required to pay C 4,57,500 minus 37,500. So this is the amount to be paid to the executor of C. The representative of C is required to be paid 4,20,000. So here I prepare executor's account, and 4,20,000 is transferred from C's capital account to the executor account. Now the capital balance of A and B will be carried forward to the next 6 months time span. So that becomes opening balance in the capital account for next 6 months. Now I am supposed to distribute this 2,05,000. For that, I am required to consider the provisions of Partnership Act. Application of 37 of the Partnership Act. Section 37 of the Partnership Act says that the unpaid retiring partner or the unpaid legal heirs of the retiring partner are either entitled to have an interest at the rate of 6% on the unpaid amount for a period till he is unpaid, or otherwise, whatever the profit is earned by partnership firm with the help of his unpaid capital, that proportion of profit should be paid to the legal heirs of the retiring partner. So at the rate of 6% or the profit earned with the help of the unpaid capital, out of these two, whichever is opted by the legal representatives of the retiring partner shall be paid, has to be paid by the partnership firm. Now this is an important provision. In the absence of specific agreement amongst the partners on the above subject matter, the representatives of the deceased partner can receive at their option. Either they can have an interest or they can have a share in profit. So there is an option either to get interest at the rate of 6% or to have a share in profit earned through his capital, unpaid capital. Interest at the rate of 6% per annum or the share of profit earned for the amount due to the deceased partner. So out of these two, whichever the option is selected by the representative of the deceased partner has to be paid. Now what is the unpaid amount? 4,20,000 is the unpaid amount. Find out. At the rate of 6%, the account is settled. You are told that account is settled at the end of the accounting period. So 6 months interest will be calculated on 4,20,000. So interest 4,20,000 into 6% into 6 upon 12. So 12,600 he is entitled to have interest on this unpaid amount because he is paid after 6 months from the date of retirement. So either he can go for or he has a right to claim 12,600 or optionally. Now, what is his capital? What is the capital of a retiring partner? Look at 4,20,000 is the unpaid capital. What was the capital balance of A and B? 4,90,000 and 3,90,000 was the capital balance of A and B. So A and B's capital balance was 490 and 390 at the time of retirement, and the unpaid amount at the time of retirement was 4,20,000. So whatever the profit is earned with the help of 4,20,000 in proportion to the total capital is to be worked out. Let me do that. So profit earned out of unsettled capital, 2,05,000 is the profit. How much profit earned with the help of 4,20,000? So 4,20,000 is kept in the numerator, and the total capital for 6 months, capital of A plus capital of B and capital unpaid amount of C. All these 3 funds were applied for the purpose of earning profit. So that is kept in the denominator. So on this total capital or total fund, profit earned in 6 months, 4,20,000, profit earned in 6 months, last 6 months, 2,05,000. What is the amount proportionate to the unpaid amount of 4,20,000? So on the basis of that, if you work out 66,230. So there is an option for the legal representatives of the C either to take 12,600 or 66,230. The rational choice will be to opt for more amount. So in the given case, it would be rational to assume that representatives would opt for 66,230. So out of profit, 66,230 is to be paid to C, means legal representatives of C. So profit and loss appropriation account debit to executor's account credit. Now the remaining profit will be distributed between A and B in the equal proportion. This is the executor's total dues they were paid at the end of the year. And after that payment, the bank balance was found out, so no need to go for adjustment in the bank account. It has already been paid, you are told that. So now, 2,05,000 minus payment to the executor of C, remaining amount will be distributed between A and B in the equal proportion. So 69,385, 69,385. This will be credited to the capital account of A and B. Now find the capital balance and write this capital balance in the balance sheet. So 490 plus 69,385, 59,385 minus drawings. This is the balance. Same way, work out the balance for B. This capital balance will go to balance sheet A and B. Now your balance sheet total should agree. So if you make a total of liability side as well as asset side, you will find the total to be 12,68,770. This is how the sum gets solved. So main purpose behind this sum was to take care of application of the Partnership Act for the purpose of determining the amount to be paid to a retiring partner on the unpaid balance. That was an important issue considered over here. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to